What's up, fam? Welcome to the start of the 2023 bull market as we cap off the rest in peace to the 2022 bear market. Remember, I did this video a couple weeks ago and I got a lot of hate. I got views from people that don't typically watch my videos because the headline was catchy, and some more people came in and they slandered and they didn't even watch the video. You heard what I was saying. I was saying, like, the headline's more of a joke. We'll see what happens if we take it day by day. We take it candle by candle. But it's nice, right? And it's nice to have that idea that the bull market is back and that we're on track, right? That's it. Like, listen, there is the possibility this is going to be the nastiest fake out rug pull of all time. And I'll show you where, why, and how, which would be nasty. But there's a lot of signs that are saying we've had enough. They've done enough damage. The market's pulled back enough. We don't need to see any more. What do we have in here, right? Average bear market, 35% down, 289 days. If we go look at NQ, and we're going to use NQ because NQ took it the worst, took it on the chin, right? You know, if we think about, let's do time and price. If we think about price and time, how many days when we hit this bottom in here was 322 days, 37%. Okay? We don't need more than that. Like, I know, like, bears, you want more. I understand. Like, greed is a bad thing. You want more. But very few times. In the Great Depression, okay, we went over 37% twice, 3 times, 4 times, all in the Great Depression, right? Here we go in the Great Depression again. And then where did we go more than 37%? 1974, similar inflationary bear market. And then where? Again, 2008, Great Financial Crisis. That's it. Like, we've gone down big time, 37%. That is huge. I know I'm just referring to the NASDAQ, but if you think about growth, Kathy's been in bear market for 2 years. February 2021, Kathy topped out. Man, this is a long time, guys. Like, we're talking. Okay, let's go look at ARK really quickly. ARK is so, like, forgotten now. It's like I don't even have it here anymore. Like, I did Kathy 30. I took her off the watch list. Where did we go down? We went down 80%, and we've been in a bear market. Come on, excuse me here, for 650 days in growth. Significant, right? We've gone in a significant downward spiral. We don't need any more. We are looking for signs that this is going to bottom out. We hit 350. The market hit 350. Come on, guys. Like, that's pretty significant. I thought, rightfully so, we could get to 320. I'm looking at this pivot to here, that top, right? We ticked inside this box. You're never going to buy the bottom. When you're at the bottom, nobody thinks it's the bottom. There's always more negativity, and eventually slowly start to come out of it. And then some headlines come out, and then some news comes out, and all of a sudden you're trading at 420, 430. You're like, whoa, look at what's happened off at the bottom. It's hella hard. It's not easy. Even this week, Sunday night, I did a post for Fit. The market has hidden bullish divergence. It was on the 4-hour and the 8-hour. This needs to correct. That mofo didn't correct till today, until Powell came out. So all week, the trading was crap. Monday, Tuesday. What is it? Today's Wednesday. Monday, Tuesday, crap. Boom, one candlestick. Powell comes out, talks, reverse of Jackson Hole, right? Boom. There you go. So you have to be ready. You have to be ready to pounce on these things. You have to be ready. Okay, I'm going to jump on these things because that's your chance. It's your moment. Because leading into it, you're not feeling too good. It's not looking too good. There was a lot of bear flags out there. The Russell bear flag was breaking bear. The ES SPX SPY was testing its support. It's demand zone over and over again. I'm thinking, oh man, he's gonna pummel this thing. Like, it's just hanging out here. Boom, opposite direction. I'm not very good at deciphering all the headlines, right? All the news. I basically will look at the news, understand it a little bit, but really focus on what the charts. But some of the headlines that came out today. By the way, we have CPI still on the 13th. So we're going to need that CPI to still, like, come in cool so that we can have that continuation Santa rally. GDP just above 0. That's exactly where he wants the economy to be. He does not want it to be below 0. So he likes that. That's why he removed that hawkish tone. These are headlines I'm gathering, right? He doesn't want a negative GDP. Great. What did he like that he talked about? That core good inflation is dropping. He really liked that. Okay. Housing services, he believes, will plummet in 2023 because new lease signings are plummeting now. The wage spike is dropping. I think it was 2 to 1.7 jobs per person or something. And that was in the JOLTS job numbers today. He likes that. He likes where the economy is right now. Doesn't want it to go below negative GDP. He doesn't believe we're going to go into a recession. Now, I know you can laugh at whatever Jay Powell says. Oh, like all the headlines before that was completely wrong on. But he doesn't believe the market's going to go into recession. He thinks that it could be a soft landing. And, although 50-50, they believe half of the Fed members believe that we are going to go to a recession. The other half, he doesn't believe it's going to go. He's basically all but confirming he's going to put 50 basis points hike in December, which the market will like. The Fed fund rate potentially to top out at 4.6, 4.8 when people are pricing in over the market pricing in over 5. So that would be good. And the market loved this news, and the market squeezed, and everybody got squeezed. Everybody got squeezed. That was bearish. All this bearish tone, all this bearish thought process coming into it. The squeeze was the potential squeeze was there. We're hanging on support, and we saw a huge run. So this is a potential confirmation that this market downtrend is complete. It is over, and we're going to see opportunity from here. The challenge throughout the year has been the opportunity's been limited. It's been small, and it's lacked follow through. It's lacked day 2, day 3, getting multiple days. We saw it in June, July, August. But other than that, we didn't see too much of it. We saw a little bit in March, a 4 or 5 day spike in March, and then this in here. Otherwise, any opportunity we've had has been very limited. Even the move coming off of the bottom in here hasn't been great, right? You got a bull day, bear day, bull day, 2 bear days. Then we had a little bit of a run in here, right? This was pretty nice. Bear day, bull day, boom, drop it down, sharp spikes. In the movement down, then we had the CPI print. Was this CPI print? Anyways, whatever data event this was, and then nothing but chop. And finally, out of the 12, 13 day chop period, we see a massive bull candle coming out of here with massive volume. I can only assume this tells us higher prices to come because it was broad-based participation, because everybody participated. All the names ran today except AMC. Energy. Okay, there's a bank. Okay, but for the most part, on my watch list, anything I was watching was freaking exploding. 2-minute ADMA, 5-minute ADMA, the thing was running. The thing never stopped. That was a really good sign because we're seeing a squeeze across the board, broad participation, really good indication that we're going to see follow through on this move. Unfortunately, there is the risk that we don't. We'll talk about that, and something we're going to have to watch going into the next couple of days. Tonight, futures market doesn't really matter. In my opinion, we should consolidate. We should open up red. That's what we should do. Look what the freaking charts did. You know what I mean? It's the second time I've used freaking today because that's where I'm tired of the bear market. I want everybody to make some money. I want us to come in and have some good back-to-back days. So it went on a tear. This is Squeeze City. Excuse me, Susie. Get out the way. What did this go from the bottom to the top? 3.5% in 3 hours, 3.5 hours. Massive move. But it's gone vertical. I mean, what's the hourly RSI? Was it 80, 85? Okay, we hit 82. Of course, we need to consolidate. So, of course, where the futures, could be down a little bit. Hopefully, it's not down a lot. Hopefully, it's just a healthy bull flag going into tomorrow. And then we could get that day 2 continuation. Even if we don't get the day 2 in the market, we could still see some individual names continue to squeeze, which is going to be great. And we'll have to see which names are continuing to move, the day 2 moves, and, really focus on those opportunities. Coming into the week, I'm just going to recap in here what I was looking for, what the concern is right now, and what we should be anticipating. This was very frustrating. It was frustrating because I hate sitting here doing nothing. I hate sitting here thinking there's opportunity and then not too much happens, right? Coming into the week, I'm watching the chart have this this bullish opportunity that is here. Just gonna fix this up. This bullish opportunity that is here because we're still in an uptrend. You know, you can get very bearish once you start to consolidate, but we lose sight of the market has not broken supports. And this is why I came and did that video for you yesterday. And this is where I've been focused on, you know, making sure I'm not leading people to be bearish. I need to see one of two things to be bearish. One, I need to see the RSI correct, a lower high, and then a drop down, and a loss of these supports. I do not want to front run momentum because if I'm wrong against that momentum, it's opportunity cost as well. So if I was just bearish today, I would have missed out the opportunities that were out there. And there was a lot. I want to be a bull. I want to go bull. So for me to go bearish, I have to be super convinced that it's bearish. And in my view, I was looking at this, I'm saying, it can't be bearish right now until we correct this hidden bullish divergence. That needed to correct. Well, it did more than correct. It exploded. It went up to a new high. Unfortunately, it's not so great in the manner in which it did it because it did it all in a very short time frame that you have to be ready for it and ready to jump on it. Whereas, you know, you could layer in, you could be like, okay, this is looking good. You know, we could continuation. The worst part about this is if it's all one candle, right? If it's all one candle and now we go through 2 days of consolidation, then it's like crap. You know, you don't get the fall through. The big move happens on one candlestick. That sucks. That's what happened in here. Well, we had 2 candlesticks, a little bit more upside than we chopped around forever. But I needed to see this correct. Well, it did correct. It did it in a very nice. It did it in a very nice manner. What they did, though, the people that control the market, they made us believe they were going to drop this down. I was thinking, too. I was just sitting here and thinking, man, you know, the fact that you haven't broken this bull, is he just going to dump it, right? He's going to dump this thing down. We're going to hit 385 in one candlestick. I thought about it, right? I was looking at it. It's like, you're going to ruin. The market's not doing anything. It's waiting for him. This looks like a head and shoulders. Potentially this is going to happen. This demand zone, which is freaking gold, 3 times with the freaking how many times have we hit this? 1, 2, 3, 4, 5, 6, 7, 8 times. This is strong support. Whoa. I thought for sure you come down and hit. I thought one time we could bounce off of it. One more time we could bounce off of it. But we come down and hit it again, it's going to break. And it didn't break. It hold for gold. It held for gold. Look at this thing. And then we saw the huge reaction out of it. So support, major support in here. Major support. I would not want to be bearish in the market again unless there's some significant sign up above until that zone breaks, right? Or when that zone breaks. The other thing was we're still in an uptrend. As much as we're in a larger time frame downtrend, which we're trying to see if that's reversing, we are in an uptrend on this move. And until we stop being in an uptrend, it's very hard to just be bearish, unless you're just a perma bear, right? And you want the world to burn, and that's what you want, and that's your attitude, and it's your style, whatever. I don't care, do you. But until we break through this trend line, the bottom trend line in an upward move is what matters, not the upper trend line. The upper trend line on a downward move is what matters, not the lower trend lines. So now we have our clear line in the sand. This thing is continuously holding as our support. But now we are coming up to the big dog, the one that's been pushing us down all year. Major pivot points. All-time high. Yep, you thought we were rallying in March, you got smoked. You thought you were rallying in August, you got smoked. I don't mean you personally, I mean the market. And here we are again. We're coming up to this trend line again. Here we go, SPY. Thought I had it nicely drawn in SPY. There it is. It's right here. It's going to be here tomorrow. We'll go check out SPX. We're right there. Right? We're going to be there tomorrow. And now all eyes on this. All the while, we're at the bottom trend line of the VIX. Now, the VIX has just been, I don't know why people spend all their time trading the VIX. Like, man, holy, this is terrible trading. But anyways, I don't care. Looking at this lower trend line, while the market's at its upper trend line, we reach an inflection point in the market. So can we get a day 2? Can we get a follow through? Can we get a breakout? It's going to be the most important line in the market in the next couple of days. Tested in the next couple of days. The upper trend line in SPX, SPY, ES. Bottom trend line on the VIX. There is that graph, I don't have it handy, of when the VIX spikes. Spiked in 2008, very similar graph, or following that very similar pattern from 2008. Let me see if I have that handy. Let me see if I had that handy really quickly. Yes, I do. Yes, I do. Thanks to my good buddy Raj, right? That's currently where we are in the VIX in 2022, that lower trend line. And that's where we were in 2008 before it spiked huge. So next couple of days, the price action in here is going to be so important. Can we break this trend line? And that's what we're going to want to see. If we think, do we have any indication that tells us we are going to break? We do. It's the Dow. The Dow's already broken. And the other indices can now be in catch-up mode. That's broke. And it broke to a weekly higher high. And today it exploded. So we do have the Dow already leading this move. We have the Russell in major catch-up. Needs to major catch-up. You've got to have these names on your list. Okay, these are not all Russell stocks, but these names, you have to have them on your list, because the explosive moves that could come out of this could be life-changing for you, for your account. And NQ has so much room to catch up to where the Dow is. The Dow is here. The Dow is 20% away in terms of the chart pattern behavior, where the candles are, because the Dow is trading up over its August high nicely already. That's how much we would have to move in NQ to catch up. So we do have an indication of the bear market ending in the Dow, the trend line breaking in the Dow, the weekly lower high pattern being broken in the Dow. So what we could look for is if we're going to get the Santa rally in December now. Seasonality charts suggest that we will see a bull run here, and the seasonality charts have been absolutely fantastic as well, right? We would be going into this December run, right? Seasonality is fantastic. That's what we could be looking for. Catching up to the Dow, maybe seeing a little bit of rotation. We didn't see that today. The Dow stocks also exploded, so you can see what happened with the Dow chart. So next couple of days, it's going to be extremely important to break through that trend line, not see the VIX spike off the lower trend line. And then you can factor in a whole bunch of other things that might come into play, what the dollar does, what the US 10-year does, what the bond market does, all those things. I'm not going to go through a million different charts to explain. It's all going to come down to, anyways, what ES does. And ES is going to be a relation, NQ is going to be a relation to what those charts are also doing as well. So it's a really good time. It's a really good time. I do favor that. I do favor, I want the bull market back. Of course, everybody wants the bull market back. It's nicer. It's nicer trading. It's nicer follow through. It's nicer day twos. It's nicer for weekly options. It's nicer for, letting yourself hold some trades for more than an hour. I do want that back, especially for everybody that's had a hard time this year, and especially for those that are holding bad positions, that you're looking for the market to bounce back and get some profits back or get some money back. Ideally, that happens. There's a lot of opportunity out there in the market. This could have been a higher low very nicely on Apple. I did swing Apple. I had Apple in this 141 range, and it wasn't doing anything. And I thought, let me take this off in case Powell smokes the market. And I bought it back higher at 143, and it paid very nicely. This is great. It's going to come up into this resistance. We're going to have to see what happens in the resistance. But what I'm looking for and ideally trying to play is, this is our first move off of the bottom. This is our second move, and we're going to go on a big third move. That's the ideal scenario. Validation would be breaking up over the 152 mark. All these names look great. Look at what Microsoft did. Broke to a higher high. It's fantastic. Huge move. I didn't play Microsoft. Google, huge move over here on the triangle. Massive. Congratulations to you guys playing this. This is the one. Finally showed up. Made some really good money on this. And finally it's showing us some signs. So we did have a triangle in here. This was a triangle that did break bull, like a lot of other triangles I talked about yesterday. Did break bull. Now we have our resistance. If we break through here, we target 210 to 212. There's a lot of opportunity. I can't get into all of them. AMD is looking pretty good. Amazon, I think, has opportunity to go on a huge run now. Netflix, Meta, Meta. These triangles all broke both. They all look good. But in my opinion now, guys, it's all about that. It's all about getting the day 2, day 3. There's numbers. I just got an alert right now, but the PCE numbers tomorrow at 8:30. Of course, we're gonna have to watch. We're gonna have to see. It's all about getting the follow through. Day 2, breaking the trend line. We don't need to do it tomorrow. Like, we could bull flag tomorrow. We could be in a consolidation mode, healthy, trading a little sideways. That would be fine too. We don't need to see a massive another explosion tomorrow. It would be great if names give us some bullish kicker candlesticks tomorrow, give us that day 2 follow through. But the main focus tomorrow and the next couple of days is the trend line at the top. Can we break up over them? We do have signs. We're going to want to see that. We're going to want to get that follow through. Let's see what the market gives us in the next couple of days. Hope you enjoyed the video. Peace out, everybody. Have a great night.